Hello, today we're issuing our latest report on the Irish residential market, which looks at the performance of the residential sector for the third quarter of the year, so for the 3 months ending September 30th, and also looks at what we can expect from the year ahead. The first key takeaway we can see in that third quarter is that demand levels remain very robust. Unfortunately, supply levels also remain very constrained. And the overall impact is that prices are continuing to rise. So across the country as a whole, we saw average values rising by 1.8% in that 3-month period. That brought the 12-month figure to 7.6%. Slightly different trends when you look at the urban areas versus the rural areas. Dublin saw a slightly more subdued level of price inflation at 1.1% for the 3-month period, bringing the figure for the 12 months to 6.5%. Whereas if you look at all counties outside of Dublin, average values rose by 2.6% in the quarter or 8.3% in the year. So we are seeing this trend, which has come in and out of the market a lot in the last couple of years, of a higher value increase outside of Dublin rather than within the capital. And the main reason for this is the supply shortage. Our biannual analysis of stock showed that in the summer of this year, there were just over 14,700 units available for sale, which is about 0.7% of the housing stock. It's critically low. Now it is up about 2,000 on where we were last year, but last year was the lowest level on record. If you compare the stock available across the country today to what was available in the pre-COVID period, so July 2019, stock available for sale in the second-hand market is down by over 36%. And probably most notably, when you look at rural and regional locations, stock levels in 7 of the counties outside of Dublin are down by over 50%. Probably most notably in Carlow, Offaly and Cavan, where stock levels are significantly contracting. And in those regions, we see that construction activity is particularly low. So we know we're not building enough houses, but over 50% of the stock that we are building in the country is in Dublin or the Greater Dublin area. And as a result, rural Ireland is suffering from increasingly depleted levels of supply, and this is what's fueling the price inflation. Now we look at transaction levels. The figures available today are really just for the first 6 months of the year. And we can see there were about 21,500 units transacted and closed in that first 6-month period. That's up about 2% of where we were in the first 6 months of last year. The increase in transaction activity is coming from the new home sector. There's about 750 additional properties closed in the first 6 months of this year versus last year. But that still means that there were still under 4,700 new home sales closed in the private market, which is very, very low. We looked at the second-hand market. The level of transaction activity contracted by about 1.7% down to 16,700. So we see again the impact of the very constrained levels of supply leading to a shortage in transaction activity in that market. Now, as we're approaching the end of the year, it's important to look at what these trends suggest for next year. We've had very significant interventions by the government in recent months, particularly in the budget and the post-budget period. And all of these interventions will serve the market well into the future. However, they're unlikely to deliver a V-shaped recovery in supply. So as we look into 2026, there's every reason to believe that the market will remain constrained in terms of its stock. And that suggests that we can expect another year of above-trend price inflation in the year ahead.